Okay, it's the 4th of October 2024, and we are about 25 minutes to New York Open. We've got NFP today, so that's about almost an hour from now. So we're going to spend the next 30 to 40 minutes doing analyzing the chart uh, on the 4-hour time frame, probably down to the M30, and then draw zones and look for high liquidity zones. And wait for price to get there. I'm not going to be trading, opening any trades during news. Very likely going to be waiting for at least 15 minutes after news to look for a trading opportunity. Okay, so let's get straight to the charts. Okay, this is the daily time frame. We are still ranging between 2672 and 2630. Right in the middle is 2650, so price keeps bouncing off 2650, but we're still within this range, right? Since last week, we've been within this range. We don't have a clear direction yet. Today, there might be a breakout, either above or below, right? Now, we don't know where the breakout is going to be, at least on the daily time frame. It's unclear whether it's going to be a bullish breakout or a bearish breakout. There will most definitely be a liquidity grab, and that's what I want to kind of anticipate where that liquidity grab is going to be from. Okay. Again, as a session trader, because I trade just 2 to 3 hours of the New York Open, I really don't care what's happening on the daily time frame. It makes no difference to me what's happening on the weekly or the daily. I'm more interested in what's happening on the 4-hour time frame. Okay, so let's get to our trading chart. Okay, before we proceed with our zones, I just want to point out kind of what happened yesterday. So if you watch either the first 40 minutes of yesterday's stream or the last 30 minutes of yesterday's stream, you will see these zones. And the reason for the first 40 and the last 30 is because the first 40 minutes or the first 45 minutes is when I'm drawing these zones, and I'm marking these lines, the supply demand lines where price can come to. Um, I'm identifying high liquidity zones, and then the last 30 to 40 minutes is when, if I do get a trade, that's when I possibly do get a trade in the last 30 to 40 minutes, right? So if you watch yesterday's stream, you will see these zones are marked. These entry levels are marked. 2638.45 was marked. Price came, touched it to the pip. It was in a light green area, so we had marked this high liquidity zone, which was a larger zone, right? It was about an 84 pip zone, and inside that we had marked a lighter green area, which is about I think a 37, 38 pip zone, and inside that I had marked a 5 minute, I think a 5 minute demand zone, which was even smaller. I think it had like about a 10, 15 pip. It was a 10, 15 pip zone inside that green. And that's exactly where price touched, and it has pushed up 300 pips, right? Now, the reason for sharing that is because I just want you to understand. I want you all to understand the purpose of drawing these. There is value in identifying these zones correctly, in identifying high liquidity zones correctly, right? Okay, so let's delete all of these and start with a fresh chart. Let's get rid of that. I'm going to get rid of that as well. Okay, get rid of that. I'm going to keep that. Okay, so just to save time, I'm not going to delete these ones at the bottom because price has not come to them in the last 3 days. Okay, we've been in this range. Price has been in about a 300 pip range, bouncing within a 300, maybe about a 250 pip range, right? About a 250 pip range. Price has been bouncing inside a 250 pip range over the last 3 days, right? From about there to about there. That's about 250 pips, right? Over the last 3 days. That's what we've been doing. Just we go to the top, we come down, we come to the bottom, we go back up. Okay, so we've been ranging within a 250 pip range over the last 3 days. So price hasn't come beyond this, so I'm not going to redraw them. If you want to see how I did draw them, go back, watch the streams at the beginning of the week, either on Monday or Tuesday, and you'll see why they were drawn. Okay, so like for example, this is a demand zone, a rally. There's a base in candle there and a rally. Okay, that's a leg in, base, leg out. So I have marked that. Okay, but then if you go back to the beginning of the week, you can see clear explanations on why these zones were drawn the way they've been drawn. Okay, I'm going to now focus on what's closest to current price, zones that are closest to current price right now. Okay, let me get rid of this as well, just to make things a little less complicated. Um, get rid of all of that. Okay, that's better. So that's almost a clean chart. There's nothing, this price has not come here and prices hasn't come here either, right? We're in between this. So now I'm going to draw zones based on what I see right now, and I will talk you guys through it. Okay, so here there is a rally and there is a drop, a rally and a drop. So that is H4 resistance. Also, when there is a rally and a drop, that looks like a supply zone. So if it looks like supply, it is supply. There is probably a base in candle inside there, right? We're going to take a look at that. So just mark that out, roughly about there, right? We're going to take a closer look at that and refine that. For now, we're going to leave it. And that is a reaction to this supply, right? This supply that we had marked out yesterday. So for example, this supply that I had marked out yesterday, um, this is a reaction, this drop is a reaction to that. Okay, so out of that supply, there is a little bit of it still left. See, so we're going to push that up there. It's not much, but there's a little bit of it left because price hasn't broken through yet. If it once price breaks through, then I don't need to draw this box, but price hasn't broke through it yet, so I have to keep that box there because that is supply, right? So right down here up to here is the supply zone, the rally, 3 base-in candles and the drop. Price has come deep into it, so I'm going to push it up here because that bit of supply is still left. Okay, uh, right, let's look. And then you have these two zones above. I'm not going to redraw them. Go, as I said, go back a couple of days, probably Monday or Tuesday, and watch the first 30 minutes of the stream, and you'll see why these zones were drawn. Okay, and why the light red boxes were drawn inside them as well, and why they were identified as high liquidity zones. Let's look at demand. Okay, so we have demand right here. So price seems to be making more demand zones than supply zones, right? So we've made one supply here. This was yesterday's supply. So we've made just one small supply here, but we have made clear demand here, and we've made clear demand here, right? So price seems to be making more demand than supply, right? So that's very important to note. Which means price is pushing up. So the more demand zones it creates, the more cleaner, clear demand zones it creates, that means price is pushing up. And the weaker supply zones it creates, that means also price is pushing up. Okay. Now I'm going to bring this up here to that. Okay. So that was a demand zone there that has been taken out. One second. Um, that was a zone. Okay, that was the zone. Prices come into it. There is a little bit of it left. Okay, there's a little bit of it left. And that is, okay, so that's basically what we have. Right now I'm going to extend these to, we're going to put in the numbers on these. This one I'll need to clean this up a little bit. Let me just go down to the H1 time frame. Yeah, okay. Okay, let's put in the values here. So this low is 454. Let's start up here. 834, 437, 34437. Okay, and this one is 739, 801, 9. Okay. Now price came down into it, so that little bit of that demand is still left from this zone. Yeah, so this zone was up here, and now it's come deep inside, so it's come to about there. We're going to just draw it to the wick there. Sorry about that. Meter one. Okay. 8, 7. Okay. Then this low is 454. 4. That low is 474. Yeah. Okay. Perfect. Okay. So those are the demand zones that we have. So the closest demand that we have is this one right here. That's the closest demand that we have. Okay. Now let's look at supply. Here there is supply. We probably need to go down the H1 to take a better look at it. Well, not really on the H1 either. So maybe on the M30. Yeah. So that's the zone there, right there. Okay. Now you see the rally and the base and the drop. So there is an M30 base there, but it's kind of very weak. It's very weak. Okay. Because this is you got to remember that this is a tested area. This is off that H4 supply and it's tested several times. So let's put in the numbers there. 791, 677. Okay, and this one is 311. Okay. Okay, those are the zones that we have for the New York session today. Okay, so we can extend this also. Show if price will, yeah, price could come down. It's NFP today. Anything can happen today. price can move 300 pips or even 600 or 700 pips today. Okay, with NFP, there's a surge of volume that comes in, so anything can happen with NFP. Okay, so those are zones. We don't have anything above because that's all-time highs, so we don't have anything above here. Um, Now, if you want to see why these are marked as high liquidity zones, then you'll need to go back and watch probably Tuesday's stream, the first 30 minutes or first 40 minutes of Tuesday's stream, Monday's stream, and you'll be able to see why these are marked as high liquidity zones. So very quickly, the reason they were marked because they took out an opposing zone. Okay, so if a supply zone takes out an opposing or an opposite demand zone, then I mark it as a high liquidity zone. So these zones have taken out opposite zones, and that's the reason I've done it. So to see exactly which zone that was, you'll need to look at either Monday or Tuesday's streams. Okay, now from the zones that we have drawn, we're going to see which ones are high liquidity zones and which ones are not. Yeah, okay. This zone here, it took out this, right? There was supply here, there was supply here, right? There was supply here, rally, drop, supply, rally, 3 basin candles and a drop. There's supply there, and there is supply here, rally and a drop. There's supply. All of that is supply, right? Even here, there's supply. So this one move, even here is supply. All of this, all of that up to there is supply, and this one move took out that supply. So this becomes a high liquidity zone. Okay. Later on, we're going to look deeper into that high liquidity zone and see if there's a particular liquidity candle that we can identify, right? That comes later. Okay. Did this demand zone take out a opposing supply zone? Again, we'll need to go down to the H1 to take a look at it because it's not clear. There's a lot of noise here. Okay. So on the H1, yeah, so this move up here, this move up, right? This candle and this move from down here until there, 150 pip move, took out all of that, right? This was a drop, 1, 2, 3, 4 basin candles and a drop, right? We had marked this out yesterday, these supply zones, right? So it took out this move took out this supply, right? And even this supply, this drop, base, drop, right? Even that. So there are 2 supply zones that are very close to each other on the H1 time frame. That one, which is that there, and then this one, which is up to there, right? So this move up took out all of that. So this too becomes a high liquidity zone. Okay. Further down. Now, this was a high liquidity zone yesterday, but price has come into it, and there is a bit of it left. Let's go down to the H1 again and see if we should mark it. I am going to mark it, right? So this move up took out this supply. Let me just zoom in so you can see it. So this move up, this was the start of the move up, right? Or at least the pullback and then the move up, took out this supply, this rally base drop, and this drop base. These are 2 basin candles and the drop, right? So these highs, basically that high and that high was taken out by this move up, so making this also a high liquidity zone. That's the reason that we had marked it as a high liquidity zone yesterday, but price came and touched it just by a pip and then moved up, right? So I'm still gonna mark it as a high liquidity zone in case price does come down. Okay. And that's about it. And this one, we didn't, this was the origin of the move, but it is not a high liquidity zone because This was the area that took out those two supply zones, not this, right? Price stopped here, pulled back, then it took out. But because it's at weekly support, I'm going to pay attention when price gets there, if price gets there today, right? Okay, so those are the high liquidity zones that we have for today. Um, okay, just want to look at this last one. Yeah, so this one also, this demand took out that supply. So you can see that there is supply there. There's a rally, two basin candles and a drop, and this push up took out that supply. Yeah, rally, two basin candles and a drop. So that's the zone. All right, it's about a 60 pip zone. Um, Rally, two basin candles and a drop, and this move up took out that, making this also a high liquidity zone, the last one that we have on our chart, right at the bottom here. Okay, done. Now we're going to look at the supply zones, if see if they've taken out. So there is H4 supply here. Um, there is supply here. We're going to just look on the H1 time frame to see if it took out something. Yes, it did. It did take out. So this, if you go down to the M30, this zone took out this H1 zone. So if you go here, there is an H1 demand zone here. A rally, base, rally, rally, leg in, base, a single basin candle, and a leg out, right? Which is about a 14, 15 pip zone. This move down took that out. So we're going to mark this too as a high liquidity zone. Okay. Then going to look left at this one here. Let's go down to the H1. That was what it's left of this zone. It's what's left. Its prices come deep into it. Okay, so that was the zone. It's about 125 pip zone, and price came about, um, yeah, it came halfway into it. Okay, so this zone, even though it was a high liquidity zone, I'm no longer going to consider it a high liquidity zone anymore, because price came midway into its it's come halfway into it. Okay, so I'm no longer going to consider this a high liquidity zone. If price is to grab liquidity, it'll probably grab liquidity from above this weekly resistance at 2672, right? It'll probably grab resistance. If it's to go down, then it'll grab liquidity from above. That is a clean zone. That's a clean zone. Price will probably grab liquidity from there to continue down. Okay, so yeah, I'm not going to mark that because it's just wicks there. If I go down to the M30, it's just wicks. Yeah, it's not a high liquidity zone. All right, that's what we've got for today. Just quickly post this on the group. Okay. On the daily, there is no new support or resistance created. That's the same resistance level that we've been kind of reacting to, 2662.50. So that's the closest one that we have. That's fine. Okay. So this is the New York Open, but we've got another. I'm going to wait another 30 minutes. I'm not going to do anything for the next 30 minutes. Just going to be waiting and taking a closer look at these zones while uh, we wait. Okay. Yeah. So we've got about 25 minutes for NFP. Okay. Right. Um, let's take a closer look at these zones that we're waiting at. Now, there's one right here. There's one down here. Let's go down to the M30. nothing much there. That's a big liquidity candle, that candle right there on the H1. This is nothing much. There's a candle there, that candle right there, or these two candles right here. But price has come to that candle already. Price has come and touched this candle here. This candle, this is a liquidity candle. This pushed price up here all the way 100 to 106 pips. Price has already come to it. Okay, so and then there are just these two candles. So I'm not going to really, if you go down to the M5, yeah, it's that candle there. See how this candle stands out? And this is what I'm trying to show in the streams. Look for the candle that stands out. So this is the candle that stands out, and you can see at this candle, so that candle is about a 11 pip candle. Price did come to it, right? Price touched it and then pushed up 52 pips. Okay, so there are trades that if you learn to identify those candles within high liquidity zones, there are trades from all of them, right? And if you want to put that into your trade plan and take those trades, that's absolutely fine. Okay, so let's take a look at this candle here. This was a liquidity grab. This was the open of the 4-hour candle in the NY session. And it grabbed liquidity from that previous H4 zone that we have drawn. On the M30, yeah, there's a big wick there, 52 pip wick. Look at the 15-minute, also a big wick. Maybe look at the 5-minute. Yeah, it's a very big zone. It's a very big zone. This is probably setting up for today. Yeah, I can't draw that entire candle. I can, yeah, the 5-minute will have to do. Price did come into that 5-minute candle, into that grab liquidity. And then you have this 1-minute candle. Close 478. Close 478, same. Perfect. And that's a big zone. That's a 67 pip zone. But keep in mind it's NFP today. Okay. So price is about 125 pips, 120 pips away from that. We should come through this. Price should break through this and fall down because we've already grabbed liquidity from that candle. So this was the candle that stands out. Right. That's the candle. We've already grabbed liquidity once. We've pushed up. Once we break this low, price is coming down. It's coming all the way down to this H4 zone, right? That's a drop of about 100, 110, 120 pip drop. Okay, once you break this low, so I'm going to just keep this here just to show you guys that once this low is broken, price should drop. If you've drawn it correctly, if I've drawn it correctly, that's a drop. Let's just go down to the H1. Yeah. Yeah. So that's the drop there. Basin candles all the way up to that. The 4-hour. Yeah. This candle too pushed up from 2650, but price can react to this candle and go up. Yeah, this candle, this M15 candle here, that's a 47 pip candle, but that's okay, let it do so. If it does that, that's fine. I'm going to wait lower down here. Okay, that's where I'm going to wait. So this low is 552.731. 731.552. Okay. So once we break this low, right? Once price breaks this low, it should come all the way down to 2650. Now, once it comes to 2650, price could grab liquidity from this candle, this M15 candle here. This was also in the New York session yesterday. I just want to mark that candle. Let's just take a look at that on the M5. Let's take a look at it on the M5. It's mostly that. Price failed to return to that. On the M1, no, it doesn't look so great when you go down time frames. Doesn't look so great. It's NFP today. Anything can happen. Yeah, that's the only reason that I'm considering that is because it's right in the middle of 2650, and if you look at the daily, we've rejected 2650 a couple of times, right? This daily candle has no bottom wick, so it's very likely that we come down, create a bottom wick, and then push up. That's very likely to happen today. So if it does come up, come here, it could come to 2650 and then push up. Let's go down to the 5-minute. Yeah, price might not come all the way down here. Might not come. Might just react here. It's 2650. But it is not in a high liquidity zone. That's the issue. Unless this is a base-in candle. Consider this as a base-in candle. Consider all of that as a base. Drop 2 base-in candles because this candle has more. Let's see, it's got a 40 pip wick there. It's got a 37 pip, that's 77 pips. It's got more body than wick, so no. Yeah, so I'm going to have to just wait here. I'm not going to do anything here. This is a clean candle. It's clean space, price can just drop right through it. Yeah, I'm not gonna do anything, even though there is a H1 demand zone there perfectly on at 2650. If it does react to that and go up, so be it. That's okay. I'm just gonna wait down here. I'm gonna take a closer look at this zone. Now this one we decided price had already tapped into it. low is 38.01. This low is 41.18. 41.18. 38.01. Yeah. So these are the two previous daily lows. That's the this is the previous day low. This is yesterday's low, and this is the low the day before that, right? Thursday is low, daily candle low, and Wednesday is daily candle low. Okay. Um, there is liquidity there under those candles or at those wicks to go up if price needs to, and especially under those candles. There's liquidity under those candles to go up. Okay, 15 minutes more for NFP. Yeah, just this is a huge M15 candle. It's a massive M15 candle. Still a 30-40 pip zone. Let's go down to the, yeah, 43.83, 43.83, 42.71, 42.71. Okay, so if price gets into this area, that's about a 57 pip, 56, 57 pip range, and I mean a zone, and that's about a 46 pip zone. Okay, it is quite high, but then it's NFP, and you have to give allowance for the fact that it is NFP. Let's look at that drop. Look at that drop from NY Open 60. That's the amount of volume there is today. Look at the size of that M5 candle. That's a 36 pip M5 candle. 15 minutes candle. Look at that. 52 pip candle on the 50. So there's a lot of volume today. So 50 pip zones don't mean anything today. Okay, 50, 40, 50 pip zones don't mean anything. So you have to give allowance for the fact that there's going to be a lot of volume coming in the next 10 minutes. It's already started. Okay, so then we've got further down this candle here, right? Now that's the one that price did come to yesterday. It came to this candle. We had marked this candle yesterday perfectly. 864454. Okay, look at that. Price tapped it, right? Tapped it, went straight up 290 pips. Now, just going to take a look at the closer look at that candle. Just a 5-minute maybe. Yeah, that's better. These two 5-minute candles. Okay, 30. Now price has tapped it. It did tap it yesterday, and then it went up, but it's just nicked it by a couple of pips. So I'm going to keep that zone, and I'm going to mark that same demand zone that we had marked out a couple of days ago. This one right here. Price didn't come there. 641. Okay, it didn't come up there. It came to the one that we had marked here. It came to that one, but it didn't come to the one above, one below. And we had marked this one, and we had about 18 pip was the zone. If I place a pending order there, I may have not got triggered because there was slippage yesterday. So I don't know if the broker would have, filled me in or not yesterday if I had placed a pending order there. But that doesn't matter. That's old news. So we've got this marked out, 2636.41. On the M15, that seems okay. 26, maybe the one above as well. 3686. 3686. Okay, right. Just look at it on the 1 minute. Yeah, perfect. 3686. That's perfect. That's better. Okay, right. So that's what I've got marked. If price does come down, 264383, 264271, 263686, 263641, and if you come down further, then I don't know. Then that's 300 pips away. Then we are coming down to this zone here, 2630 weekly support. So if you come there, here inside this, to that candle there, right there. If you come further down, it's there, 2959, 2959, and right at 2630, 18. Yeah. Okay. So if you do come further down, the reason I draw these is if price does tap them, then I know which zone it's come to and which area it's reacting to, and then I can take I have a better understanding of where price can go next. That's the reason I mark these zones. Okay. So what we've done so far is this. It's pretty simple. We've drawn our H4 supply demand zones. We've identified high liquidity zones, which ones are high liquidity zones out of them. And inside those high liquidity zones, we'll look for liquidity candles. Okay, that's what we've done. So when I'm looking for a liquidity candle, I'm either looking at the M30 or M15 time frame, right? Sometimes when I have a huge candle like this, I have to go down to the M5. I don't have a choice but to go down to the M5. Now, price is reacting to this candle again. We've reacted once, we're reacting again to it. And if you go to the inside that candle, if you go to the 5-minute time frame, you should see a demand zone right there. Yeah, that's the one it's reacting to. Here, 679. Just zoom in for a bit. That one. Okay. So that's all a base. That's all a base. That's a rally, right? If you look on the 15 minutes, it's a rally, and it's a base and a rally. Okay. But if you go down to the 5-minute, it looks a little bit better. You've got those 4 candles, those basin candles, right? Those four candles which are basin candles, and then the push-up price tried to come back. It couldn't, failed and pushed. So it's a failure price. It failed to return to this area and pushed up. Okay, so that open is 679. Okay, so we've got about 6 minutes to NFP, and we can see price reacting there. But if it does react there and pushes up, so be it. I'm not going to open a trade uh, right at news. I'm not going to do that. It's NFP. Price can just slip you by 100 pips, 50, 100 pips. It can easily slip you by 50 or 100 pips. It's an NFP. There's a lot of volume coming into the market. You can see prices already gapping. You can see on the 5 minute, on the 1 minute. It's not even news yet, and we've already created gaps. Okay, we are coming down. And I said if you break this light green area, we're coming down to 2650. Okay, that's the area that we're coming to next, 2650, if you break this. But even though I know that, I'm not going to open any trades before NFP or during the news release. Okay, we're going to wait. We're going to see, let price come to an area and settle down, and then we'll see if we have an opportunity or not. But this is the 265679 is where price is reacting to. So if it doesn't break this light green area, price could push up. If it breaks the light green area, then we're coming straight to 2650. Okay, and then maybe even further down. So right now we are respecting 265679. Let's see in the next 2-3 minutes, if it doesn't break, then we might just head up. Okay, we've drawn our zones. We've done everything that we can possibly do. I've done everything that I can possibly do here. Okay. Okay, 4 minutes, 3 minutes more. 3 minutes more. This is the candle that price is reacting. This is the one that we've drawn our light green box on. Okay, this candle right here. This candle right here. That's the one price is reacting to. It touched the light green box during the just after London session, but it didn't come to the zone, to this to the demand zone, and now it's touched the demand zone, right? And we've broken two lows. We've broken a low there, broken a low here. If the next candle respects this low, then we can continue high. What numbers are they expecting? They're expecting bad numbers. No, they're expecting good numbers. Sorry, they're expecting good numbers. Yeah, they're expecting good numbers, 147K. So if the numbers are good, price can just probably gap down and drop 200-300 pips. That's very possible. Okay, a minute and a half more. So we just wait. Let price come. Okay. 30 seconds more. 30 seconds more. You see how spreads are increasing. Whoa, dropped, dropped, dropped. Is it going to touch our area? Open the trade right there. Drop right to this. If we come down, to this wick, I'm going to manage risk. I'm going to have to close the trade because there's no way to manage risk. Yeah, we came down, coming down further. Coming down further, we broke through that. Yeah, so this zone was, low was 3801 and this low is 7. Yeah, so we broke this. We broke all of that. Let's get rid of all of that. It did tap this again for the second time. It tapped this light green area for the second time and it's pushing up. Numbers are very good numbers. We're expecting 147k. The numbers are 254k. 254,000 new jobs created. 254,000 new jobs created. Yeah, we could be possibly coming down here, but we are reacting to this, to that light green area that we have drawn. Okay, let's just get rid of this box. We don't need this anymore. Yeah. Price is reacting exactly to that candle that I had marked. That candle right there. Touched it. But I think price is going to push down further. So this candle had consumed its liquidity. I think on the 1 minute time frame, price had come further down. If I had kind of did notice that, but because it was such a big M15 candle, I kind of ignored it. Yeah. So if you look here, this wick, this was the liquidity wick. Price came into it, grabbed liquidity. Now we're pushing up again from here, right from there. We're gonna have to wait. We're gonna have to wait for price to settle down. Gonna have to wait. That was the wick that I was anticipating to push price up, but we broke below it. So what price has done is, this was yesterday's daily candle low. Price has gone below it and grabbed liquidity from below that candle. And I said this about 15-20 minutes before news, that this is the previous day, day's daily low, and this is yesterday's daily low. This is previous day's daily low, and this is the day before that, right? And there is liquidity under those lows. So there was liquidity under that low. That's why price came down and pushed all the way up. There is liquidity under this low, and price came down, but it hardly broke it. It's just by about a point, a couple of points. So I think price is going to push down further. Um, and if it does, it's coming to should come to weekly support. That's the area that I'd be interested in next. This candle right here. This is the origin of the move. This is the origin of this 430 pip move up, this candle right here. And that's where I would like to see price come to. It's a tighter zone. It's about a 25 pip, 26 pip zone. Get a trade there and call it a day. That's where I would like to see price come to. But we have grabbed liquidity under this candle, under the previous yesterday's low, and price it did the exact same thing. It reacted to that M30 candle yesterday and pushed up 295 pips, and it's trying to do the same thing today again. We should come down. We should come down. We are pushing down. Price is rejecting. Okay, let's draw support resistance levels and see where price can go to next. Yeah, that's fine. Okay, we are reacting to that. We should push down. Let's draw another one up. Okay, there is one there. It's very ugly. Price is coming down. Um, yeah, we rejected that area. Rejected. So if we close below this support, we should come further down. We need a 5-minute close below this to continue down. If now the 5-minute has closed above it, so this candle breaks the high, we're continuing up. Six, eight, one. Okay. Where's the next? So what's happened? Yeah, so we've rejected that 5 minutes. This 5-minute has to close either at this support or below it, and then we're continuing down. Yeah, you can see how this is rejecting this area to come down, to break these lows. Once it breaks these lows, we're coming down here. Then we should have enough volume to push further down to come to weekly support. That's where price is coming next, to this weekly support, right? If this weekly support doesn't hold, we're coming down to this area, this candle here. That's a rally, base rally to that zone. So that's about another 180, 190 pips. Um, Otherwise, if an M5 candle closes above, then we're going up again. Okay. What's the next area? There. Yeah, that one there. 479. 749. And yeah, that should be enough. It's plenty of place for price to move. 5702. Okay. Okay. Let's take a look at the yeah, so we've closed below, so we're coming down, right? Now it's very easy to put a stop loss above that and take this trade to come down. Price is coming a lot further down. I'm actually going to do that. I'll put my stop loss above here, of this resistance here and do take a trade there, because anticipating price to come down. Should come down. $47.70, 45, 47. Okay. $7.15. Yeah, kind of. This was the NY move down. Price is ranging a bit. 5-minute candle needs to close, says closed above. A 5-minute candle needs to close back below this for us to continue down. Okay. Um, so, so this 5-minute closed below, closed at support. This one closed back above. This one needs to close back below to continue down. If this candle closes back above, then we're continuing to this range, back to this resistance. then I might close this position here around there. I might just close it around there. I don't want to hold a lot of drawdown. But if it closes back at support or below this support, then we're continuing down. Here's where I'd like price to come to. Here. To hmm. Okay, so partial positions closed on that one. So now I'm going to lose less than what I had intended to lose on that trade. And this one touches here, partial position should close on that one also. And once we break the low, we should continue down. So 2 minutes more for this M5 candle to close. No, 3 minutes more for this M5 candle to close. This has to close below, price to continue down. And should break this low. Then we're coming down here. So the reason I took this trade was there's a lot of bearish volume, and I drew these support resistant lines right here just a few minutes ago, so you can see why they were drawn and how they were drawn. And then I said that price is rejecting those areas. It rejected this, right? If you go down to the M1, you can see that it rejected this resistance. So I put my stop loss above that. This entry was a bad entry. I admit that this was a bad entry. This was a better entry. This is the entry I should have taken. I shouldn't have chased price. This is me chasing price here. This was a better entry with a stop loss of about 30 pips to anticipate about a 130 pip move, 35 pip move down here. Have we broken the low? Almost. Yeah, we broke the low now. We should continue. So another 25% of my position is closed now. And now, if price moves back and stops me out, I lose a lot less, right? So now the idea is for price to break this zone and to come down. Once it breaks, we're coming down all the way to weekly support. That's the idea. We're coming down here to weekly support, 2630, okay? Or to this 2633 area. Okay, 2632, 2630. Yeah, so we've broken that. We're coming straight down now. We've broken this, so we can get rid of that. This low. What's the TP there? 39. 40. Yeah, so now we've broken through that. You can get rid of that one, get rid of that. We're coming straight down. So this is our first TP level here, 2630, 2632. That should get tapped, and then 2630 lower. Okay. Um, yeah, and that's gone. Now this is price is at this H4 demand. This should get tapped. We have 263364 is daily SR. The low is 3205. It should tap this. 30-minute. There is daily SR there. You got to be careful. There is daily SR there, right there, 263364. So if I start to see a reaction there, then I'm going to close the trade. But once we break this, we should come down. Once we break this low, then we should come straight down. Because price can react here. There's a daily SR level 263364. Right? We had this level marked from, I think, when was it marked here? A few days back. Yeah, 263364. 263364. From this is daily support. Now we've come straight down to daily support, right? The low of this candle is 3213. That's the first TP level. So we are reacting to daily support 263364. So you got to watch the 5-minute now. The 5-minute is rejecting that area. We came awfully close, but we are reacting to that. So now if price goes back to my entry, I'm going to have to close these trades because it's come to daily support. It's a 50 pip push up just from there. That's a 142 pip drop. Yeah, that was the. I'm going to see how price reacts to this area. I'm going to see because partial positions have closed already, so I'm going to see how price reacts to the area. If we begin to if an M5 candle closes above this, maybe I'll manage risk. I'll close this position. If it closes above this again. If you react and push down, then I'm going to leave the position running. This M15 candle should close below this support. This one closed at support. This should close below. If this closes back, this is closing below. It's just a 4 seconds more. Yeah, we are closing below. So the next one should wick and continue down. Should wick up, continue down. We've closed below. But we've come to daily support, right? We've come to daily support. So you got to pay attention to that. We've come to daily support now. These are lower time frame support resistant levels, right? M30 and below, H1 and below. If you go around the H1 and below. But this is daily support. This is daily support. Right here is daily support. So You're reacting to daily support now. You gotta be careful. So price did push up. It should come down. It should come down. There is no there is no liquidity here. Price hasn't grabbed liquidity. When price grabs liquidity, you will see either an engulfing candle or a liquidity candle with a liquidity wick. Right? You'll see that. On the M5 it has sorry, on the M5 it has grabbed liquidity. That's a liquidity wick. Yeah, it's a 45. That's a liquidity wick. So if an M5 candle closes above here again, then I'm going to manage risk. If an M5 candle closes above this resistance now, I'm going to manage risk. We might come up here. This candle has no top wick, so we might come all the way up here. It's another 36 pips away. Now this candle grabbed liquidity from daily support. This is the area for this is an area for liquidity as well. Weekly support 2630, and also this candle here, right? This candle. This is based off that light green area is based off a candle. This candle here. That's price may or may not come to that. We don't know. Price may come to that or may just continue higher. It's grab liquidity. It might just continue higher. But back to the entry. I'm going to wait for an M5 candle to close above and then manage risk. Just going to wait for this M5 candle to close. 2 minutes more. Yeah. Seems like it's going to close above. A minute and a half. If we don't reject this, then we are continuing higher. We need to reject this resistance area to continue lower. $458. Just close the doji. Means nothing. Price could continue up higher now. That's when price closes the doji, you just can ignore that candle. So then this is the candle that you rely on. So this candle has closed back in. You want this M5 candle to close below or to start seeing M1 reject this area to continue down. 20 seconds more. If you close at support, then we're going to continue higher. We are closing at support. I mean, we're closing at resistance. Yeah, we're closing here. So the next candle is going to go higher now. So I'm going to manage risk on this one position. Yeah. Okay. Close that one. Price gets here. I'm going to 58. Same 15 high, 656. So price did react to daily support, pushed up. It's about 25 pips. Okay, so that's a deeper entry that I've taken, another very small position. If you come up here, I'm closing everything. So break this high, I'm closing everything, right? Once you break this high, then we're coming up further into that resistance. There's no need to hold the trade. Price, if it needs to reject and close, this is the area that it needs to do that. Once it breaks the high, we're going up. Yeah, that's it. Price breaks this high, closing the rest of it. So that's about 23 pips. Okay, so 0.5% loss on that trade idea. Now, just wait. So price did react to this. This was a liquidity grab. Price reacted here. It's heading up. Yeah, we are heading up. Grab liquidity to continue up from that daily support. That's where it came to exactly. So gonna have to wait for this 15-minute candle to close to see if price does come down to at least that area to get a trade, right? But the zones are too big today, so maybe I might just call it a day today. Maybe I might just call it a day because it's NFP and the zones are way too big today, way too big. So that's the candle. Grab liquidity from this green area, from this that is very close to this weekly support, but there's daily SR there, so it came exactly to daily SR, and then that's a 5-minute liquidity grab, 15-minute as well, a big wick, 65, 67 pip wick, and we're pushing up now. And price just came here. Yeah, it's just unfortunate. 16. Yeah, this was the, if at all to open a trade, that was the one to open a buy trade on. Yeah, but 656, 3205. Okay. Yeah, the zones are way too big today. And I don't think price is going to come all the way down here now. And even if it did come, that's 70 pips zone. That's way too big. So I think that might be it. That might be it. Price did close above here. Now we're going to continue higher. We did close above, so if we do pull back here, so this support might be worthwhile taking a trade, because we are going all the way up here, 2661 and beyond. Yeah, that's where we're probably heading there, heading to that daily resistance, to this one, 2661, 2662. But price has to pull back for me to be able to take a trade. I'm not going to chase price. Close 293, open 294, close 286, 286, and then this one is 3883. Yeah, we're just continuing up. We're not coming down. We're just going up now. Yeah, price is pushing up. That's a liquidity wick. Grab from this high liquidity, this zone. We hadn't marked this as a high liquidity zone, but I had said that this was the origin of the move up, right? This zone is the origin of the move that started this entire push, 400 plus pip push up. So price came right to it, grabbed liquidity, but did not come down here to get a trade. So on the 15-minute, just grabbed liquidity and continued up. Yeah, yeah, that's it. This NFP, this is the as you know, as just like how price moves very quickly um, to levels in NFP, right? Comes down quickly, moves up quickly. It creates very big candles. That whole movement creates big candles. So you see the 5-minute candles are 75 pip candles, right? That's a 65 pip candle. That's a 100, 200, almost a 200 pip candle. So when it creates big candles, your zones, automatically your stop loss zones are going to be very wide, very, very wide. It's too wide for me, way too wide for me. I mean, if price does come down, I rather trade on a day where I'm able to take a trade with like a 30 pip stop loss, 25 pip stop loss, 15 pip stop loss, sometimes even a 10, 11 pip stop loss. But trying to take a trade with a 100 pip stop loss or a 60, 70 pip stop loss just makes no sense to me. I don't want to chase price because price can easily pull down for liquidity and go up again. I don't want to do that. So that's going to be in the end. So I took a 0.5% loss today, and that's it. That's very manageable. That's the reason I manage risk the way I do. So the way I manage risk, you saw it. Soon as price closed in an M5 candle, closed back inside support in this SR level, I closed 50% of the trade there, and then soon as price came deeper in and came very close to breaking the M15i, I closed uh, another 50% there, and I had absolutely nothing left. A very small position left here, which I closed the rest there. So I didn't let my stop loss get hit. My stop loss was up there. I didn't let that get hit. I saved 12, 13 pips. I saved it, right? So I closed the last position. I closed here, but 50, 60% of my position I closed here at this candle as soon as it closed back in, and that's what I said. Once it closed back in to this zone, I'm going to close partial positions, and that's what I did, right? So that's very important. That's how you manage risk. That's how you end up with a very small loss. So if hopefully, if I don't know when my winning trade is going to come, I don't know. I don't know whether it'll come on Monday, Tuesday, or Wednesday. I don't know. But because I've taken a 0.5% loss on my losing trade or my losing day, when the winning trade comes, it's easier for you to recover the loss and then even maybe make some gains. Right? That's what's important to note, and that's what I try to show in this live stream, how I manage risk. As much as drawing these zones and drawing SR support resistance levels are also important, managing risk is equally important, is equally important. Okay, that's going to be the end of the session. I think price is going to probably range now, and um, I'm not going to be here. Price has to make a very long drop of about 100 pips for price to come into an area for me to take a trade. I'm not going to be looking for opportunity here, because even if it does come, that's a very big stop loss. That's a 65 pip stop loss, which I'm not willing to take. So I'm just going to wait. I'm going to probably wait for Monday or Tuesday, and then let's see uh, what we can do, right? So we've had now a 15-minute candle close above this resistance, so price should continue higher. We are reacting to 2650, which is right in the middle here. We've reacted to it several times before, but price has closed above. We've grabbed liquidity. We should continue high for the rest of the day. We should, right? But we might have a pullback and then continue on the M30. We are creating support on M30. So maybe once price creates M30, so there's 10 minutes for this M30 candle to close. Once price creates an M30 candle, you got to see where that M30 candle closes. That M30 candle should ideally close above this SR level that I've drawn here. Should close above this, right? Just like this candle did, Once it closes above, then we're heading all the way up here. We're coming to 2661, 2662, and even further up, right? That's the anticipated move. But an M30 candle needs to close above this support level here, right? This one, around above 2647, basically, right? Close above 2646, 2647, then we're going to continue higher. Okay, there's one thing that I missed to do today, which is what we usually do. We kind of see what the Asian session has done, London session has done, all of that. So let's just quickly do that. That's the open of the day. That's the opening candle of the day. Let me zoom in here. Okay, so that's the opening candle. Price opened there, and then, so that was the London low. Okay, that was a London low around 2:30 a.m. server time for me. And then, yeah, that's the London high right there. I mean, sorry, this is the Asian low, and that's the Asian high. Sorry, that's the Asian low. So 2:30, around 2:33 a.m. server time, you start looking for a low from that point onwards, and then you'll see that'll be the Asian low. Then the Asian high around 5:36, around 6:30, around server time, my server time, and then we have the London high, right, which is that, and then we have the, yeah, we have the London low right there. Okay, so that's what price has done. Okay, so let me just zoom out. So price opened here. This is where the market opened, right here. Okay, this candle right here created a low in the Asian session, went back up, created an Asian high. So it moved quite a bit, moved about 92 pips, then broke that high to create the London high, came back down, broke below the Asian high, tried to come back to the Asian low, couldn't, created the London low, pulled back up very close to the Asian high. There is a level there. There is a supply zone right there that was created. Once price broke here, we pulled back up and we created a supply zone, right there. Just before pre-NY came, tested that zone and went straight down, broke the London low, Asian low, and came straight down, right? And now we are in really kind of unknown territory here in terms of the daily, what's done on the day, what's happened with the Asian highs, the Asian lows, and the London highs, London lows. We are beyond that. We're extended. Okay, we're extended by about 218 pips. Okay, so if price starts to close back above the Asian low, right? So we close above this, which is this support level is very close to that. I mean, this resistance level is very close to that. We close above this, then we're coming back to the Asian high and then even possibly the London high again, right? But if price pulls back and rejects from this resistance area that's very close to the Asian low, then we're pushing down further. We're pushing down further. So basically, if you reject 2650, or if you reject this resistance, or we come up, we reject this resistance, this Asian low, if you reject and start closing below this resistance or closing below 2650, then we're coming down. We're coming down. Okay, that's the story. That's the story for the day. But if you start to close above 2650 and close above this resistance, then we're going up. We're going back to this zone here. Then we're going to break that and go to the Asian high and then possibly the London high. But that can take a long time, right? And it's a Friday, so the volume might have kind of dried up by now because we've had almost a 300 pip push down, since NY. Yeah, a little over 300. Yeah, so we had a 300 pip push down in NY, so the volume may have dried up, and then we've also had a pullback of about 190 pips. Okay, so if candles begin to close below 2650, as I said, then we're coming back down. We're coming back down. So that's just ranging. There's nothing happening. It's just price is just ranging right now with nothing. So there is absolutely nothing to do. At least for me, there's nothing to do. Price is just ranging. It hasn't decided if it's going to close above or close back below. You want to see an M15 candle, at least an M15 candle, close above 2650 for price to for us to believe that price can continue up at least a M15 candle, right? Because we are now getting close to NYSE, so this could be the NY move, and then this could be now NYSE reversal, or it could be a pullback during for NYSE to continue down, right? That could happen, but to do so, both those ideas could be correct, but those ideas are going to be confirmed depending on if a candle closes above this area or below this area. So if you start M15 start candles, if one or two M15 candles start to close below this resistance or below 2650, then NYSE is very possibly coming all the way down again. If it closes above, then this is a reversal and we're continuing higher. Okay, that's how you kind of make sense of the story with what's happening currently in the market. Okay, so yeah, M15 is pushing up. We are pushing up. So if it's close above, then we are going to continue. But I don't chase price. Just because price closes up, I'm not going to chase price by just randomly. If I'm buying, I'm buying at cheap prices. If I'm selling at expensive prices. I'm not chasing. I'm not doing this. I'm not chasing this. I'm not doing that, right? So when we were selling, when I sold here, price had pushed down and pulled back up. So this was discounted selling price, right? I tried to sell up here to come down, and it did come down. I did get entry, and it came down like 125 pips, 130 pips, but I was anticipating price to come down to weekly support. It didn't. It reacted at daily SR and then continued high. So as I said, this could be a reversal. I'll wait for the 15-minute candle to close. We have come to the Asian low. That's the Asian low. Price has touched it already. And if this M15 candle closes above this this resistance, then the next candle is going to pull back down and continue high. But it needs to close above this resistance. M15 needs to close above this. You guys saw how I drew the SR levels as well. I did it. I took time to do it so that you guys can see. You can see the touch, the number of touches here. You can see the number of touches here, right? You can see the number of touches here. You can see the number of touches here. So these are all important areas. You can see how price touched. If you go down to the M5, you'll see how price reacted to these areas. How it's reacting here, right? It's now even reacting here. When it gets up here, it's going to react again here, right? So if you draw them correctly, then you will see reactions at these zones. And if you are a scalper, then you can take those trades, right? With very tight stop losses, you can take those trades, but I'm not a scalper. I basically look for one correct move for the day, right? One or maybe two correct moves for the day. If I have a loss and I still believe the move will work, if the setup is still valid, then I'll give my trade a second chance. If my setup is invalid, then I'll look for what did I do wrong, or what is the possible correct move after that for the day, right? So for example, what I mean by correct move is this is the correct move, right? Because price grabbed liquidity from here and we came all the way up. Right now, this one obviously we can't take this trade because this is an NFP move, so I don't trade news, right? But this one, we grab liquidity and this is correct. So we came down to this liquidity zone that we had drawn, came here and price grabbed liquidity and pushed straight up. Now, this candle has closed right at support. So you want to see another candle close inside this or above it to continue, because this is closed right. It's not even closed in the middle. It's closed just at the beginning of that resistance SR zone, right? So you want to kind of see a candle close either inside it or just above it to continue higher. So you're going to have to wait for this candle now to close. M15 candle. This candle might close. We don't know where this candle is. It might close above, may close back below, may close below this. You have to wait for this M15 candle to close. All right, I'm not going to be here for that. I'm going to end the stream now. Yeah, it's a Friday. I'm not looking to take any more trades. I'm gonna call it a day. Okay, we'll um, be back on Monday and do the exact same thing. Look for identify our zones. Draw H4 supply demand zones, identify high liquidity zones, and then inside that, look for liquidity candles that possibly price can come to and react from, and then also draw support resistance levels, and then wait to see what price does. Right? That's the process. That's the process. This is the purpose of the sorry. This is the purpose of these streams, right? To do the right action, and the right action is to learn to draw supply demand zones correctly, to identify high liquidity zones out of those supply demand zones, to identify high liquidity zones or HLZ, to learn to draw support and resistance levels correctly, right? Keyword is correctly. There are a lot of ways that you know the traders draw them. I draw them in a certain way, and I believe the way I draw for me works for me. It works for me. It doesn't have to work for everybody, but the way I draw it works for me, and it's worked for me for many years, for several years. So I will continue to draw it the way I do, and then to manage risk when my trade goes in drawdown. That's the purpose. And if I do these four things right, it'll lead to one of these two results, right? That's the purpose of these streams. Okay, enough said. Uh, See you guys on Monday.